Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at a couple of assets. We're going to be looking at TLT, which is the 20-year Treasury Bond ETF, and we're also going to be looking at CFDs on US oil for the WTI, West Texas Intermediate. I've decided to put two assets together in one video, the same way I've done recently with gold and silver. This is purely to try and get more asset coverage out in the same amount of videos per week. I look back through the YouTube channel and I see that I'm simply not covering all the assets I want to consistently. This is because I have a very busy life, an awful lot of life and work commitments, and I cannot devote any more time to YouTube than I'm already doing. So what I will do is try and get more done with the time that I have. So without further ado, let's get on with our Elliott wave analysis. We're going to start with, and then some basic technical analysis, and we're going to start here on the TLT. We're on the 2-hour time frame, and essentially we're tracking this gigantic correction since the March 2020 high, where we've been coming down an A into a B, 5 waves down to a C. As you can see, I'm projecting a lower target, so I'm still expecting TLT to move down and yields to move up in the bond market. Now, when exactly this happens, I don't know. It's all about what's recently been going on with this correction, but it looks to me like we've done 4 waves down on an intermediate time frame, or 3 waves down, somewhere close to completing a fourth with one more thrust down to come. Now, I could be wrong, could be right. It doesn't look impulsive to me off of the recent low back on the 17th of March. It looks corrective, the whole thing does. So we're going to come down, zoom in, and have a look at this recent correction. So keeping things super simple here, because we really have not got much to talk about at all here on TLT. Almost feel like a bit of a fraud giving an update for it, because it's done nothing. You know, it's just gone sideways, and it looks like a correction. I can't count this impulsively. I mean, if I did, I'd be using my imagination to an extreme. I'd be having to say, well, a 1, an A, B, C into a running flat of a 2, and now we're starting a 3. But I don't like it at all, because this move here simply does not subdivide as 5 waves. It divides as another 3-wave swing. So if this is a 3-wave swing, then we can't say 1 A B C 2, then we just have to say, you know, A B C W, A B C, where there is 5 waves, 1 2 3 4 5 in subdivision, you can see. So A B C into an X, and then A B C into a Y somewhere near where we are, and then we're going to break down and start this 5th and final wave down. So at least I'm more confident now that we haven't bottomed and we're not going up. Like, that's the one thing I can say from a few weeks ago since I last covered TLT. The price data is developed in such a way as to make me believe that we're still corrective. Now, you could say 1 2 3 A B C into an A B C into a B, and then maybe this is 1 2 3 4 5 waves into a C. Okay, so it's an ABC or it's a WXY. It doesn't really matter. It's corrective rather than impulsive. And if we look at some of the targets we've got, if we take W, or if we take the length of Y equals the length of W projected from the X, we get 143.35, which we're not too far off here. So this would be a good place to complete the correction. Now, if we look at recent price activity, we come down to a really small time frame. There's an argument to suggest that we may have topped. Okay, now we've got to be cautious calling these things, because the price data is very difficult to read and to interpret because of all the huge gaps in the chart, as you can see. So it's much better to just look at the broader picture. We do seem to have a 3-wave swing here rather than a 5-wave swing. So this does not look impulsive down. But then everything from that point does look a little impulsive. Maybe there's 5 waves in here, and now we're going to come up into a correction. Or maybe this is simply an A, B, and 5 waves down into a C, possibly. Or this is an A, 1, 2, 3. This is a B, 1, 2, 3. And this is 1, 2, 3, 4, 5. Whatever. Either way, we're either near a top, or we've got another leg to come up to find parity, I think. It's possible we're on our way down. Either way, look for the retracement from this recent high. Where are we currently? If we come back into the golden ratio around 61.8, then maybe you should be looking for a reaction from that level, the 50 over 61.8, to continue the trend down, so that we get this 1, 2, the beginning of a 3, 4, 5 into a 1, and then you'll get a 2 on the larger time frame, so a 1, 2, 3, 4, 5 as we work our way down to a new low. That's how it looks to me at the moment. Now I could be wrong, and this could be some kind of impulsive move, or it just doesn't look like it to me. I mean, if you're going to call this in any way a 1, 2 off the bottom, how the hell do you get a 3 to this high here? I mean, you can't go 1, 2 again because we break down again. So could you maybe go? I mean, the only other way you could maybe interpret it would be to go 1, 2, 1, 2. But the problem there is we still can't subdivide this move here cleanly as an impulse wave. So, you know, it looks corrective. A bunch of free wave swings to me. And we may have topped. We seem to have on this time frame when we're looking without looking at the shorter detail. We seem to have a 1, 2, 3, 4, 5 wave structure here. So maybe some kind of 3 wave pullback, and then we continue to move down, looking for a reaction from that pullback if you want to short it. But yeah, that's all I've really got for you on TLT at the moment, guys. It looks corrective. We seem to have put in a big 3 wave swing off of the low, 1, 2, 3, which is what we'd expect to see as a retracement. And then now we're going to swing lower again, or soon we're going to swing lower again. Now let's just switch off our count for a moment, bring up our indicators. And our 10 exponential moving average in yellow, our 20 in blue, our 60 in orange, our 250 in green. We're going to back out to the weekly time frame first and get a real big picture of things going on. Now, first thing I look at when I look at this on the weekly time frame, before I even consider the other indicators, of which we have a MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. We also have an RSI set with a 30 set to a 10 close with a 30 green level representing oversold, and the red 70 level representing overbought. So, going back to what I was just saying, the first thing I notice is that this move here off of the low looks even more like a 3 wave swing now to me. It looks like we've gone a step here, step here, step here, step here, and we should be having another step down, or should I say 1, 2, 3, 4, 5. It just feels to me like this is corrective, channeling corrective action rather than impulsive, you know. So on the weekly time frame, still above the 250 exponential average, above the 10 now, have collided with the 20 and started to sell off. Below the 60, the 10 and the 20 are through the 60 with the price below. That's what we call a death cross. It's bearish. It's not the ultimate death cross of bringing the 60 below the 250. I mean, by the time that happens on the weekly time frame, we're normally looking at a bottom, or very, very close to it if it happens at all. Excuse me, allergies are playing up and my throat's a bit scratchy. I'm drugged up to the eyeballs at the moment on antihistamines. Right then, so we've had a short-term time frame cross over the long-term moving average here on the MACD, some green bars on the histogram, but it could just be corrective. I feel that that's what we're looking at here. We got so oversold on the weekly time frame down to 15.5 on the RSI here that we crept back up into the neutral zone here after going from overbought to oversold. So a huge move. Now if we come down to the day time frame and have a quick look, now we did get that death cross on the daily time frame of the 60 through the 250 with the price below dragging all moving averages lower, and sure enough after getting it we just collapsed. Here was the death cross here, a few days later collapsed to a low. Now since then we've tangled up the 10 and the 20 and the 60. We've brought the 10 and the 20 back above the 60, still well below the 250 though, so this could just be corrective action. Could be a bottom, could be just corrective action. We do seem to get that same 3 wave swing in the RSI and in the MACD. So we get a move to here, move to here, move to here. Same in the RSI. We have gone from oversold since the bottom on the RSI back to overbought before we put in this red candle here and started to sell off. So we've done another round trip here on the day time frame from oversold to overbought. That could be enough to signal the completion of the correction, but we would want to see another breakdown through these moving averages and then a clear impulsive move and retracement back on the larger time frame in the price action hanging around our point of control here in the volume profile. Not surprising given that all the visible range we have at the moment is this quick move down. If we drag it back and bring a bit more price action into the screen, give the point of control time to settle down, it still appears that this is the greatest concentration of volume currently. We had a large peak here and we've now got a large peak here. A lot of buy-sell activity here. It's a bit of conflict. I mean, it's not really conflicting signals, but seeing a big build-up of trading volume could signify a bottom, and that we're starting to pull in a base before going higher. But the price action simply doesn't support it. It does not look impulsive to me. If you can find an impulsive count, be my guest and share it. If you're a member, share it on the Discord if you've got one. Alright then, so I'm going to leave it there for the TLT, guys. I'm still expecting another move lower. I think this is corrective rather than impulsive, and I'm expecting one more thrust down to come shortly, maybe within the next few weeks. Okay, so that's TLT, so let's move over to our oil counts. And we have two to look at. We have both a bullish and a bearish situation. They're both, I guess you could say they're both bullish long term, really. So let's just have a quick look at what we're talking about here. How I see things currently. So from the March low, and this is the one where we're going to be interpreting things bullishly since making a new recent high. So we're coming up in what is 5 waves, like this, off of the low, and we're now moving higher. So if we come in and have a look at more recent price activity, this has been a bit of a pig. I'll be the first to hold my hands up and say since the high I was struggling to get this down, and this was on the 8th of March. So we just have an A, B, C zigzag down into a 4. We then start to build a pretty screwy first wave up where we get a 1, A, B, C, 2 minute time frame. We get an impulse subdivision in the 3 minute, which we like to see. We get 4, and then another impulse wave in the 5 of the 1. So we've got an overlap, 4 over the 1. 3 is not the shortest. So this is a diagonal into a minor wave 1. And then we've gone A, B, C. Inside of that, A, B, C, A. B expanding pattern, 1, 2, 3, 4, 5 waves in the C. So an expanding flat inside of this A, expanding flat B, C. So an expanding flat subwave inside of an expanding flat to find the 2. Now that's okay, I can live with that. The problem here is this looks very impulsive, right? Would you agree? I'd say so. Except when we come in to look at the subdivision, it's an absolute shit to try and get an extension out of it. That makes sense? Now let me show you why. Let's find all of our peaks for a minute. Here's one. Here's another. Oh, here's another. Here's another. And here's another. And you can see pretty clearly what my problem is. Until this top line here, we don't get an overlap. Or sorry, all we get is overlaps until we get to this point here. So if we want to make this our 1, 2, we can't make this a 3, 4, 5 because we've got an overlap. So we'd have to go 1, 2, 1, 2. Great, can we get something here? 3, 4, 5. No, we get an overlap again. Alright, well what's inside of this wave structure here? 1, 1, 2, 3, 4, 5. Alright, so we go 1, 2 again. So can we go 3, 4, 5 here? No, because we get another overlap. Alright, so can we go 1, 2, 1, 2 again? You see what I'm saying? We've got a serious problem here, which is we just can't dig out a frickin' sub. We can't make any subwave make sense. It's just either the subdivision is so extreme and we're building some kind of insanely extended wave, or there's something else going on here. So for the moment, because of all this overlapping price action, I'm going to make the suggestion that this is 1 and this is 2. Because now from this point onwards, we actually do get what looks much more cleanly like an impulse wave. It looks just better. we would be on minute. Yeah, so inside of this move here, 1, 2, 3, 4, 5, 1, A, B, C swing here. And then we've got no overlap here, so we can get a 1, 2 in here. And then what's this structure inside of here? So is this a 1, 2? Or is this a 3, 4? Either way, you can see the problems I'm having with labelling this. All this overlapping is making it tricky. 1, 2. So where do we get our 3? We can't get a 3, 4 here. We could go 3, 4 here, but then we can't get... Can we get 1, 2, 3, 4 inside of it? No, because we overlap. Can we go 3, 4 here, and then go 1, 2, 3, 4, 5? That might work if it wasn't for the fact that we get an overlap here. 3, 4 here. So 1, 2, 3, 4, 5. I mean, that would probably be my favourite choice. Oh, sorry. Clicked on the screen too many times. So what? 1, 2 we're saying. Excuse me, I'm making a pig's ear of this. 1, 2, 3, 4, 5 into our 1. I'm just going to need more time to fiddle around with this. Now, getting a subdivision inside of this 3. 1, 2, 3, 4, 5 waves in the 3 here. Right? But then we get a 1, 2, 3, 4. We can't get subdivision inside of it. It's just a mess. It's just a mess. So perhaps all of this is just a series of 3-wave structures into some kind of very overextended one. You know, a diagonal in a 1. I mean, if you can come up with a clearer subdivision which makes sense inside of this one, be my guest. I admit I probably haven't had the time I need to really dig into it. But either way, whatever it is, if this bullish count is correct and we've gone 1, 2, then we've got 1, 2 to come, and we're just going to blow up. You know, this is just going to go flying higher and higher and higher. If we just take the minor wave extension for the 3 here, from a projection of the 1 from the 2, we get up to 77.120 at 1618, 1618 of 1. Let's just pop a price tag up here for the moment. Okay, so that's the bullish interpretation. Now here's the bearish interpretation. Now it's only bearish temporarily, it just means that we're currently still in a primary wave 4 and we're doing an expanding flat. Yeah, I said a few videos back when I was looking at oil that if we made a new high with all this overlapping zigzaggy kind of luck, we should be considering the possibility that it's just a B wave. It's just a big corrective, confusing B wave. And we're going to actually come up to find the high, then come down to find a low. We could be doing that now, and we are setting the target of the 1618 extension of A. So this move down here to find our B, and then the 1.618 extension of the A from the B to find our C. This is just a projection, it is no means a crystal ball, of course. The issue I have here is even though we're projecting this ABC, we're using a 3-wave swing WXY double combination here with an A, B, C into the W, quick zigzag into the X, A, B, C here into the C of the B of the Y, or the B of the Y I should say. We've got the same problem with the subdivision, because if this is a C wave, it should be dividing as a 5-wave impulse, and we've got the same overlapping problem trying to get ourselves up here. So it could be something else. These are the only 2 counts I've got at the moment for oil. We're even in an expanding flat and we're going to head lower. Is oil price going to collapse as bond price collapses? Maybe there's a correlation here between the 2 assets we're looking at. Maybe there isn't. And then there's the possibility that we're just extending 1, 2. This is some kind of big extension 1, 2. And then we're just going to keep going higher. That is the best I can do for oil at the moment, guys. The count is a little tricky. So let's hide it, and let's bring up our moving averages again, the same as we did on the other chart. Come out to the weekly time frame and look for some clues here. Look at, still makes me laugh when you look at it in log. That 2020 low. Right, so let's come off of log. Right, so on the weekly time frame, this is the same. We have to remember both of our counts are still bullish. Okay, one says we're going to go lower in the short term, but then we're still going to go cycle wave degree. So we're still looking for a cycle wave top in oil. Yeah, so we're looking at 1, 2, 3, 4. We're now into that fifth, or we're into an expanding 4. Either way, we are above the 10, the 20, the 60 and the 250 exponential moving averages, and we're about to get a golden cross on the larger time frame on the weekly. We're about to get the 60 cross back over the 250 with both smaller time frame moving averages above, with the price above. So this is uber bullish. We're above the point of control here as well. MACD looks very bullish as well. We've just got another crossover for short over the long-term moving averages, blue over the orange on the weekly time frame, some green bars on the histogram. We are overbought on the RSI though, and we have bearish divergence for the meantime. We have a high in RSI and a lower high in RSI. If we put in some kind of reaction here, 5 wave down, 3 wave back move to establish a top, we will have bearish divergence on both the MACD and on the RSI. So this could be the top of a 1, 2, 3, 4, 5 wave move up. But our count doesn't support that. Our count supports some kind of extension occurring. We could target a little higher in the 5 before we roll over. We may have another thrust up, or we may be about to see, this could be the signal of that larger primary wave 4 C wave coming in. Either way, on the longer time frame, guys, it still looks really bullish. Huge bullish move off of the low. Obviously, when you're starting from 0, you can only go up, and that's all we've done. On the daily time frame, we had that golden cross back here with the 60 over to 250. We've continued to expand higher since, and yeah, above the 10, above the 20, above the 60, above the 250, looking bullish again. MACD trending higher, 3 wave swing currently in the structure, as we can see from this low here. That does support the idea that this could be a B wave, but we only need a dip down and another high move up, and we'll have a 5 wave structure going on to support a motive wave. We do have divergence between the MACD highs here and the RSI highs, but this could disappear looking at how close it is on the daily time frame if we continue to push higher. Still got that 3 wave move here also in the RSI. So we just need to keep an eye on this. We're waiting for some kind of reaction, and then once we see some kind of reaction, some kind of breakdown in price, we can then assess the larger wave structure and see if we can conclude it being corrective or impulsive. But at the moment, we're just trending higher. Subdivision's a bit tricky in the current move. It could be part of a 3rd wave, it could be part of a C. It's just a little tricky to figure out, but from a basic technical analysis point of view, things are still looking solid. Some minor divergence to worry about, but we can't worry about it until we see a reactive top, which confirms that this is no longer trending higher. So, right, guys, that is the best I can do for oil. Thank you very much for joining me on this joint technical analysis video of TLT and oil. I hope you've enjoyed it. If you're new to the channel and you like what you've seen, please smash the like, subscribe, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you like. And as always, thank you very much to all my patrons. Your support is greatly appreciated. If you're interested in becoming a patron, I wouldn't leave it much later than now during the month, as I always encourage people to get in at the start of the month rather than at the later period of the month to avoid getting charged for this month and the next one at the start. That way you don't get charged in succession. But if you're interested, feel free to follow the link over to the Patreon from the description box below and have a look at what's available. And also, if you're not following me on Twitter, there's a link to my Twitter feed in the description box below as well. Alright guys, take care, and I'll be back with you later in the week. All the best. Bye bye.